Thanks for clicking. Canada's fixed mortgage rates have all surged upwards in June, with bond yields at their highest level this year, and investors betting that more rate hikes could be on the way from the Bank of Canada. And with continual increases in the cost of borrowing coming from the bank, it was announced this week that the popularity of variable rate mortgages has plummeted to pre-pandemic levels. Variable rate mortgages now constitute only 8% of all new mortgages being taken out, down from 57% in January of 2022, back when Canada's inflation rate was sitting at a 30-year high.
Learned a few things.
And possibly with good reason, as economists are already predicting another 25 basis point rate hike coming in July. So it doesn't look like rates are going to be reversing anytime soon. And with mortgage rates rising all across the board, some, including Oxford Economics, are predicting that the Canadian real estate correction is not over and could continue well past summer. So what I want to do today is go over my best fixed mortgage rates for the month of June, including looking at some shorter term options, take a look at what Oxford Economics has to say about the future of Canada's real estate prices, and then discuss what to look for next. Speaking of next, Canada's inflation data is set to be released next Tuesday, June 27th, and we'll obviously have an update out on that data on this channel. Click like and subscribe if you want to get those updates, but for now, let's get into these mortgage rates. On to the mortgage rates. First up, my best 5-year fixed insured mortgage rate. An insured mortgage, if you'll remember, that's where the buyer puts less than 20% down, has a 25-year amortization, qualifies at the contract rate plus 2% or 5.25, whichever is higher, and pays the mortgage insurance. My best 5-year fixed insured mortgage rate in April was 4.49. That jumped up in May to 4.69, and as of June is now sitting at 4.99, with my best 5-year variable rate mortgage sitting at prime minus 1.05, or 5.9%. So that's about a 30 basis point increase from this point in time last month, and a 50 basis point increase from this point in time in April. And insurable mortgage rates are also up this month. Insurable mortgages, if you'll remember, that's where the buyer has 20% down, qualifies at a 25-year amortization using the contract rate plus 2% or 5.25%, and does not pay the mortgage insurance. My best 5-year fixed insurable mortgage rate in April was sitting at 4.79. That jumped up to 4.94 in May, and as of right now is sitting at 5.34%, with a 5-year insurable variable rate sitting at prime minus 0.5 or 6.45%. So insurable rates, those rates where you qualify as though you're paying the mortgage insurance but you don't actually pay that insurance, are up about 55 basis points since this point in time in April. And uninsurable mortgage rates are also up from this point in time last month. Uninsurable mortgages, if you'll remember, that's where you refinance or take money out of your home vis-a-vis an equity takeout, or you have a 30-year amortization. You qualify at the contract rate plus 2% or 5.25, whichever is highest, and of course you don't pay the mortgage insurance. My best 5-year fixed uninsurable mortgage rate in April was sitting at 4.94. That remained at 4.94 in May and has jumped up in June to 5.54%, with a 5-year variable sitting at prime minus 0.4 or 6.55. So we have 5-year fixed mortgage rates up 50 to 60 basis points from this point in time 2 months ago, back when many were arguing that Canada's real estate correction was over and that the market was finally turning a corner, with prices reaching their bottom.
Strange, I don't remember that.
So 5-year fixed mortgage rates are up all across the board. However, many, as of late, have been taking shorter term mortgages, opting for 1, 2, or 3-year mortgage terms in the hopes that the Bank of Canada will have reversed course by then. However, these mortgage holders are certainly paying a premium for doing so, with a 1-year fixed mortgage rate sitting at 6.79, a 2-year sitting at 6.54, and a 3-year sitting at 5.99. And the holders of these shorter term mortgages pay this premium in the hopes that over the next 1, 2, or 3 years that the recession has hit, the economy has gotten bad enough that the Bank of Canada can reverse course, and then these holders of these shorter term mortgages can take advantage of the lower rates.
They'll do it tomorrow, my personal guarantee.
Indeed, as mentioned, while many had argued a few months ago that Canada's real estate correction had come to an end and prices had hit their bottom, Tony Stilo from Oxford Economics argues that the upswing in Canada's housing market that we've seen over the past few months should fade as we move into the summer months, and that we should see another 10% drop in prices by early next year. While Stilo says that we could see a flurry of sales activity in June as buyers try to beat the Bank of Canada's rate hike coming in July, weaker demand brought on by higher interest rates and more listings will result in a 25 price correction from our peak in February of 2022. So, Oxford Economics is arguing that this higher cost of borrowing will put downward pressure on real estate prices. As demand gets tamped down on the higher cost of borrowing and supply increases as more and more listings come to market, prices are likely to revert downwards. And it makes sense. You can't attribute a rebound in the market to the Bank of Canada's pause, and then not admit that the market is going to continue to correct now that that pause is over.
Want to bet?
So, in summary, 5-year fixed mortgage rates are up all across the board, though there are some shorter term options. With that said, buyers will be paying a premium to take those 1, 2, or 3-year terms. And these higher rates, says Oxford Economics, will be putting downward pressure on Canada's real estate market going forward, even into 2024. To what extent these increased mortgage rates have an effect on Canada's real estate market remains to be seen, but we'll obviously continue to have updates out on that market on this channel. Click like and subscribe if you want to get those updates, but for now, thanks so much for watching.